The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 85, NASDAQ off 14, S&P's off 3, gold contract up $4.30, trading at $15.03 an ounce. You get silver up 27 cents, $17.84 an ounce. Light sweet crude up $5.28, $60.13 a barrel. We get some movement out here.
We sure do, man.
Notes and bonds. You get the 10-year up 7 ticks, 128.26. 30-year up 18 at 158.06. And King Dollar. King Dollar up 355 ticks, trading 98.185. The euro is at 110. The yen is at 107.96. And the pound is at 124 to 1 U.S. dollar. So, might as well go over to the oil market first.
I agree. Why not, man? Quite a story, quite a news story, quite an explosion, man.
You got the Saudi oil fields getting attacked.
Literally and figuratively, an explosion.
And the bottom line, you know, when you look at oil, guess what? When we look at the whole market, let's start with oil, okay? When you look at the oil market, you know, got to 63.34. Well, your swing point is 63.87. It's like, okay, is that all you can do?
And what's remarkable is I just had it on I had to zoom in. It was a blip, man. It was a 5-minute blip last night when the futures opened.
It was a 6 o'clock open on the futures.
Yeah, and by 6:05, it was back to $60, $61 and change. Yeah.
Right. So
there it is.
There's the oil. Now let's go right to gold. So you can take a look at gold. You're going to see with gold, same type of setup. You know, very small bounce, man. In the aspect that you got in the oil fields getting smoked.
Risk.
Yeah, exactly. So it jumps up. Gold contracts get to 15.19. You're trading it at 15.03, and the S&Ps are the most impressive. Okay, the S&Ps bottom line shook this thing off in a huge way. Okay, we're 3,003 right now, and if you take a look at this, what you're going to see is that we got down to 29.83. That was at 820.
Yes.
You know, so we opened up, spike lower. Bottom line.
And it kind of had that same exact spike as oil, right? Did. Except inverse to lower. Paired it, but then it did trade lower. As in oil just kind of stayed after that pair.
Yep. And that's, you know, the market, basically when it opened, was trying to find out, okay, where do we want to trade?
Yeah.
The amazing thing here, right? Now, you know, when you look at markets, the market's always right?
Sure.
That fundamentally.
What's the price of the stock? It's where it's trading,
okay.
Right? Yeah.
So you have to kind of wrap your head around this and say, okay, so you get a major attack on oil fields, right? The market shakes it off. Oil can't get over and stay over, you know, basically 61. It's like, okay, is that all you can do for me today? Notes and bonds. Let's go to notes and bonds.
That's one way, just to put it. That was the biggest spike ever in history.
Yes.
Is that all you can do for me? Is that all you can do for me?
Right.
You know, that's a big move, man. 10, 12%, but it's only $60 though. Right. I agree.
We take a look at the 10-year note, okay, and this is what you have. So the 10-year note came down hard last week, was coming into its breakout area of August 1st. That being said, it was coming in and it almost finished an ABC structure down. Haven't quite finished it. That's coming into that area with lighter volume. You know, if I go back to the contract that we're trading, I believe it's 3 million contracts. We came down with 2.4.
Okay.
Let's just do that right now so we can look at it.
I know, quite a reversal from August to the week we had last week, pulling back almost all of those yields.
Okay, so... yeah, 3.1 million contracts.
Okay, August 1st.
Coming into that's your breakout area, right? So when I look at all this, I'm saying, you know, I just happen to be on the TD Ameritrade network for the last 20 minutes.
Okay.
And we were talking about when you have markets that basically staying at price, and you have jolts in the market like this, it's like, okay, is this a market that is saying going forward we are going to have inflation? Because what happens is that inflated markets, right, you can have a higher price, but if in fact it's an inflated market, you can buy less with it. meaning whether it's health care, whether it's education, whether it's food.
Okay.
And it's going to be really intriguing watching this, because I remember when, like, no one could figure out, well, I'm sure there's plenty of people that did figure it out. At the beginning, when Zimbabwe, this is 18 years ago now, 17 years ago. What was happening is that they had vicious inflation, right? But their market was going up every single day, like before this really kicked in.
Sure.
And everyone's looking at us like, how can this be? Well, guess what? What it was is that they inflated. The currency got so inflated you couldn't buy anymore, even though it was an astronomical price.
Sure.
So
if you wanted any other currency, once you sold the Zimbabwe equities,
you're done.
Yeah.
You're done.
Yeah.
So we're going to find out a lot here today, because we had even some of the gold equities, folks, and I think there's still some of the great gold equities are doing ABC structures down, confirmed ABC structures down last week, okay? And even the gold report that said this morning, it says, listen, I think they're going to finish the ABC down, even with all this turmoil.
Yeah.
You know, so there's a lot of moving pieces. We'll learn a lot today, though, because what we'll learn is that the bounce, and this to me would be the most important one as to where we're going, especially because we got the Fed Wednesday, right?
Right.
Is the bounce in this note and bond market, does it have anything behind it? You know what I mean? So you're at 865,000. I mean, if we do 2.2, 2.3, but we got a sideways move, really is not telling us anything.
Yeah.
You'd have to have something, an expansion forward, but...
And that oil deal, so, I mean, part of the remarkable deal, right, is it's supposedly a drone attack, like 10 drones, though.
Right.
So that's a pretty coordinated drone attack, but it's still a drone attack. This isn't like a monumental, and it's one of the fields that was pretty protected. You got fences everywhere, you got armed guards everywhere.
It's the biggest field in order to push oil across the world.
So, you know, there's very little risk, you could say, priced into the price of oil when it's trading at $54.
Yep.
Should there be more risk priced into that for geopolitical, those types of attacks? Could you see that get priced into it in the future? And then they're even talking about delaying the Aramco IPO on the heels of this morning already.
Would you buy it?
I never would have bought it anyway, because you're at the whim of the Saudi government to tell you what their balance sheet is. And I don't want to play that game, because that's a risk I'm not willing to quantify.
Right.
And
you'll really get to understand, folks, the power of banks if they just decide to plow this thing forward. that you know, an oil field can get attacked like that.
Yes.
And you're going to say, we're going to go public. And it's already in one of the perspectives. I was reading that.
And that's why I kind of shrug, because that's the business they're in. Like, if you don't think that's going to be part of their IPO and part of owning the Saudi oil fields.
Oh, yeah.
That's you know, as in it is a, you know, talking Bloomberg, a force majeure, you know, it's one of those events. But I don't know. I give it kind of this, like, it's not quite a force majeure, because you're talking about a geopolitical region that is ripe for that. Oil is ripe for that. 10 drones can wipe out a third of their, 5+ million barrels a day. That's not a...
What would 40 drones do?
Yeah, that's not a random earthquake in the middle of the country that's just completely unforeseen. This is a risk that you should be quantifying in that market. So you'll see that play out for sure.
No doubt.
Yeah.
So let's go take a look at the XLE and see what the XLE's done out here. XLE, that's up $1.61. You know, your highest swing point is 64.66. You're at 63.65. We'll see whether it can get up there. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow Industrials right now trading down 107. NASDAQ down 19. S&P's off 6. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow down 104, Nasdaq off 18, S&P is off 6. So let's see what Aramco is saying here.
Oh, they're saying, well, I was going to say joke, everything's fine, but this one, not exactly everything's fine. So this story hitting the wires at about 7:45 this morning. You saw oil, I think, at around $60 there. But then on the heels of this, you saw, again, a spike to a bit higher price. And that is being that they're a little bit less optimistic about how quickly they're going to get that output back on track. So Saudi Aramco officials are growing less optimistic that there will be a rapid recovery in oil production after an attack on the giant, how do you say it, Abqaiq maybe? Abqaiq?
I'm the wrong person to ask.
Yeah, right? give me that South Boston slang.
Yeah, right.
Processing plant, a person with knowledge of the matter said. So, of course, all eyes are on how fast they can recover, which knocked out roughly 5% of the global supply, not even Saudi Arabia, global supply. And triggered a record surge in oil prices. Initially, it was said that significant volumes of the crude could begin, I think
within days,
to flow again within days. But it may now take longer than previously thought to resume operations at the plant. The person said, asking not to be named. The company is scheduled to provide an update later today.
This field here pumps. Handles 5.7 million barrels a day, half of the Saudi production.
Yeah, and so that, I think it's all cut off right now in terms of the 5.7, because even if they had something, they cut it all down right now as they repair. It's like zero production at this plant. So the Saudi production cut in half, man. It's amazing when you think about it.
So their customers are being supplied with stockpiles, though some buyers are being asked to accept different grades of crude, meaning that they will push them into the heavy crude versus the light crude. So you had Brent futures leap $12, at the open, okay, but that didn't hold. Hey, we'll see where this goes.
So I don't know heavy versus light, because one of the things that I had heard this morning was that, they were asking, of course, the U.S., one of the analysts, I was listening to Bloomberg, and they said, the U.S. is now a big producer of energy and oil themselves. But the U.S. oil is actually a producer of light oil, which we use the heavy stuff. The problem there, we are actually an exporter ourselves of the oil that we are producing more than just producing the oil that we use ourselves, which is interesting to tie in how, it's different oil. We don't have the same capabilities of the oil that we want, I guess, in that deal. But, man, lots of moving parts in that whole
And
play.
we're going to get the propaganda from everywhere, folks, okay? That, it's one country, it's another country. So this one here is Saudi-led Yemen coalition says Iran weapons used in the oil tax. Saudi military officials said Monday that the preliminary findings show Iranian weapons. The real question is, who the heck do you believe?
Well, the Saudis and the Iranians have battled for decades, if not.
Well, this whole Yemen, they have an ongoing war right now, and this has been a big deal, meaning that they're both doing it by using other people.
Yes, right.
That's what it comes down to.
Yeah, that way you relieve yourself of culpability, at least on the forefront. But yeah, Saudi officials saying preliminary findings that Iranian weapons, but like you said, I mean, everybody's going to have their, and that's the argument is, was it Yemen, it looks like, or was it straight Iran, or was it some type of...
Well, there's your mix and match. That's what they're saying.
Well, that's what I was saying. They're saying the strikes did not... Saudis want to blame the Iranians.
Right.
The strikes did not originate from Yemen. A spokesman for the Saudi-led Yemen coalition told reporters, but you could have a group in Yemen being supported by the Iranians. That's where things get so complicated,
sure.
right? Yeah.
Right. And they are.
Yes, many times.
So the bottom line is that yeah. Well,
and then you have Trump out there saying we're locked and loaded, but then he says we're waiting for what the Saudis tell us happened. I don't think that's called leading from ahead, but we'll see what happens.
Oh, it is the head.
Yeah.
It just happens to be the Saudi head.
Yeah, I don't know.
Right.
Pretty dicey, man.
Yeah, real dicey.
I know.
The market, this is where it's going to get so intriguing. The market is shaking everything off. That's where this is going. It's like, this is just amazing when I look at it. You know what I mean? It's like, okay, so you can push down the oil production, market shakes it off, and we'll find out in the next week, okay, do they get it up or they don't get it up?
The IPO? The production.
The production.
Yeah, yes.
And then the IPO is a whole different animal. You can imagine, folks, Tommy and I were just talking at the break.
Yeah.
Imagine being the other one the road show, not the road show, but they're supposed to be out there this week. Right?
Okay,
they said week?
No, they said next week in that article.
So next
September
week,
22nd.
Next week they're out there basically,
pitching
saying,
it.
Hey, this is a good deal.
We said there's one person who's the leader in the room, the man or woman who's in charge. Now, I'm sure there's a team of people pitching that IPO, but there's going to be one person in charge. And man, oh man, what a weekend they must have had having to say, oh boy, let alone the money that's on the line for those banks in charge of pushing out that IPO, but just the stress level they're going to have to go through. Imagine pitching people saying, don't worry about this, it's not a big deal, still give us your money to invest in the Saudi oil company. That's a tough enough pitch already, I think, as I told you.
The desert in the middle of a war.
I mean, you can, it's going to be, it's going to be a state-owned oil company, okay?
Right.
So they can instantly just decide to raise taxes on the oil company, and boom, before you know it, they're taking money. It's a different scenario than just buying a U.S. equity.
All right.
Yeah.
Let's go take a look at the NDX. Right through, we'll use the Qs first and see what we have out here. So what you had on Friday is that you had lower price. You really didn't have an expansion of volume. You had a slight one, but nothing heavy. So you're lower out here today, and what you're going to need for lower price, because we're coming into the Fed Wednesday. That's going to keep some volatility in the market.
I'd say so.
You're going to need, let's see, right now this is a low with light volume. 4.2 million. Let's see, it's about an hour into it. That's like maybe 24, 20, 30 million, 24, to 27. That's not a lot. You're going to need more volume than that in order to get the lower price. Now, what the market is doing, and it's having a tough time doing it, is getting up and over the August 1st downdraft. On the weekly basis, folks, the SPY, the NDX 100 both failed on the weekly basis, meaning we got over it, we closed underneath it, and the SPY is basically laying right up here again.
Can we throw it on a weekly just to take a look?
So we take a look at this. There you go. So you're going to see that we got over the 301.93. You got to 302, and then you closed at 301.09.
Okay.
You know, that's what the failure would be.
Okay.
You were going into 447 million. You did 313.
Okay.
And it's so subtle. You know, when you're at highs like this, that's pretty subtle. You know what I mean? But percentage-wise, that's a big contraction of volume.
Yes.
But guess what? If you don't get the volume on the way down, then it's saying, okay, we can make another run higher. Because it's going to be intriguing. The market flat out is saying that we have, let's go look at it, that we have a quarter-point rate cut this Wednesday.
There's no greater percentage than 100%.
Right.
And that's, oh, whoa, what's going on?
96.7. Look at that.
That sure is, man. For the first time in many, many, many weeks.
Look at that.
I led too quickly, man. So this column had been at 100%, which is the cut probabilities.
Right.
And we now sit at a 3.3% chance of no cut. What happened, man? What happened? But still, all but assured, 97% chance. But we used to have probabilities of 50 basis points. Yeah. We'll see what happens, man.
Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 138, Nasdaq's off 26, S&Ps are up 8.5. We have gold up 760, silver's up 35 cents. Notes and bonds, the 10 years up 11, 30 years up 22. And folks, as you come over to our website at TFNN, Wednesday night is going to be a good week to do a webinar, man.
You got enough going on this week, man?
We got enough.
It's Fed Day too. Didn't even really plan it that way because there's so much going on, but it's Fed Day as well. Wednesday night, you got a live webinar.
So if you're a subscriber to the Gold Report, folks, you can come in this webinar Wednesday night. It's real easy to be a subscriber. You just come over to our website at TFNN. You go into featured content. You're going to see the Gold Report. You can hit subscribe. You can get it for a month, 6 months, a year, all with a 30-day money-back guarantee. Real easy to do. What we're going to be talking about is that why I think the next leg up in gold is 1794. And then this is where the whole thing gets really intriguing, because Tommy and I were just going over this kind of at the beginning of the show, meaning that, okay, where's the bond market going?
Sure.
Okay, it's like...
And we were just talking about the dollar moving, right? The
exactly.
euro moving over the break, for sure.
Okay. And how does that affect the gold market? It affects interest rates, which absolutely affect the gold market. Yeah. Where's the demand coming in from? Now, what was really intriguing is that we have the demand, and now the demand might even be more. How gold outperforms currencies on a long period of time, and the amount of gold that's traded every day, which is 110 billion. So I'm going to go over the technicals as well as the fundamentals inside this market, folks. Workshop's going to be an hour. Check it out on the front page of TFNN. Yeah. You can subscribe. You can get into... we can get the Gold Report today.
Yeah, new issues on Monday, right? So new issue out, published literally within the last hour. You gain access to that. You gain access to the archives. And, of course, this webinar, 60 minutes Wednesday night, 5 till 6, Fed Day. And that will be archived. So you can't attend live. That'll be right on your members page. Your subscriber. Watch as many times as you want. And I look forward to it as well, man. 1794. I mean, it's crazy when you look at gold. Just to pull it back, we'll jump on the Thinkorswim, man, because this... love this platform, of course. You pull it. You know what? I'm going to have to go back. We're going to customize this. I want the gold 20-year chart, man. Maybe it's going to cooperate with me. We're going to add. We're going to add a time frame here. I want a 20-year, man, on gold. We'll put it on a monthly. We'll add it. We need to add that time frame. There we go. We'll jump back here. Now it's going to be there. And well, talk about the S&P too. I know, right?
Yeah.
But gold, man, it's just mammoth in terms of the run we had. I got a Fibonacci on there, I guess, and look at that. We're coming right up to that 61.8, which is 1593, the 78.6, 1743, but pretty remarkable. You got to back it up to 2011 to that high.
And this is a great chart that you have up there, Tommy, because what this shows also, folks, is that this could be an ABC structure on the way up.
Oh, man, right?
Yes, and it's a long one. And
would it be, are you looking at A, B,
exactly,
C?
Exactly.
So,
because the volume characteristics were correct.
Okay.
Meaning that you start from we went from a bear to a bull market in 2001 approximately.
Okay.
You go up to the highs of 19 and change.
Yep.
You pull back, and you didn't pull back more than the 618 retracement. I think it was a 5-0 retracement actually.
Okay.
From the whole move. And then you start moving forward again, and as we have been moving forward, we've been moving forward with monster volume.
Okay.
And what I really like about this chart is that we were in a consolidation for 6 years.
Yeah.
What happens, folks, is that when you get a consolidation for 6 years, that's a long period of time that the market has shown what type of buyers you have at the top of the consolidation versus the bottom. And we broke out of that consolidation.
Yeah.
So now the real question is going to be, do you get follow through there? And we'll find out. My take is that we're going to get it. And this is what you talk about deviance. When we all saw this oil field get hit, the first thing I was thinking, of course, is that okay, I know that gold's going to be deviant because some of the gold stocks, I felt it was because some of the gold stocks are in ABC structures down. So it's like, okay, what's going to be right here? Do you know what I mean? Because first off, you think, hey, listen, if oil's going to be up, why wouldn't gold be up $50 today?
Sure. And if oil is going to be up, there's going to be some fear of geopolitical risk. You might see the market pull back. If there's, a risk-off type day, you might see some gold appreciation.
Right. And we didn't get it.
Yeah, right.
That's what's, if you're... and you can go on both sides on this, whether you're a bull or a bear. You know, me being a bull, I'm saying to myself, like, I'm kind of digging what's going on because it's so deviant that you have no movement here.
Sure.
Do you know what I mean? But the bears could say, hey, listen, man, you know, look at this. You got a oil field that's blowing up and gold can't move anywhere.
Yes.
You know.
No, good point.
And I think what's going to bring us back to, the longer term aspect that interest rates are going to continue lower. I think that's the real big catalyst inside this gold market.
And let's look at the yield on that 10-year, which I love checking out because it's been quite a run, man.
Yeah.
August, of course, higher yields, lower yields across the board, and then quite a pop. I mean, August 1st, we were sitting at, I guess, July 31st, 2.07. But there it is, August 1st, 2.05. We trade down to a low in September of 1.42, and we just peaked out on the 13th at 1.9. We're sitting at 1.85. But September 3rd, 1.42 to 1.9. That's a half a point in 10 days. 10 real days, let alone you're talking about 8 trading days.
It's huge.
8 trading days for half a point in the 10
And so you want to hear something really bizarre, folks. The way this is set up to basically test the 2% mark, which is only ice, okay? And I'm thinking now that we're so close to it, is it going to be on Fed Day that you get a spike up to the 2% mark, and we'll see whether it holds or not?
Pretty remarkable that we saw for the first time that there's not 100% priced into those Fed fund futures. I can't remember the last time there wasn't a cut at 100% on the September 18th meeting.
Oh, totally.
Let alone we had crept into 50 basis points being priced in on the September 18th meeting. Now you have, 4% that we stay flat. So, yeah, 96, 97%. The whole market thinks we got a quarter basis point coming, which we probably do. And where do we go down the line? As in it gets interesting, the future meetings almost. You know, once you're assured.
So we're
at that. We just moved. It was at 3%. Now they're saying 5+% that we stay flat. The market's moving quick here.
So we're 2 to 2.25.
Yes.
So the Fed's looking to go to 1.75 to 2.
Correct. Yep.
And then in October, you know, they're still looking that you get a probability of, is that 45%?
45%, right. Now and their pricing.
That came down pretty dramatically.
Yeah, it did. In terms of because you're sitting basically what it's saying is that there's a 52% chance that by the next 2 meetings we get 1 cut, okay? But it's all but assured that it's coming on September 18th. But then it goes 50-50, and really it stays almost 50% chance that there's 2 cuts in the next 3, and you're only talking about 24% chance that we get 3 cuts in 3 meetings. That's changed a lot.
No, it certainly has.
It definitely.
There's no doubt.
Yeah.
A lot of moving parts, man.
Oh, man.
And the Fed moving part, and of course, that's your Fed fund future probability.
Yes.
You know, what is Jerome Powell going to be saying at the news conference?
And then we get the dots, as in you get to see kind of where the governors put everything, let alone where they come out. Press conference, see what they say there. On the heels of Draghi last week with quite a stimulus package, $20 billion in bonds for as long as it takes was pretty much the sentiment.
And let's look at that euro. You see, the euro is getting hit this morning.
Yes.
You know, it hasn't been able to get back in. We were talking with Teddy Cakestack. You know, it hasn't been able to get back into that higher range.
Definitely
That's a long way away, actually. 111.
Yeah.
We're at 110.15.
Yeah.
Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 132, Nasdaq's off 25, S&Ps are off 8.5, and NFL, we had the Patriots
We
and
sure
Miami.
did, man.
What the heck happened
We're
to
a
Miami?
little biased, but the Dolphins, man, looks like they have a tough season ahead of them. They got their butts kicked last week, forget by who. Patriots stomping them 43-0 this week. And I was talking to you over the break. One of the biggest sports line one of the biggest betting lines ever in terms of the Patriots.
What do you hear this line? This is like sick,
and
folks.
I wish it was 18. It was 20 points. In the NFL, you don't get those types of point spreads.
Right.
And the money line, though, I think it ended. It started at about 20-1 favorites, the Patriots, to win outright by any point level, and I think it ended at about 60-1. So the point being, it was minus 6,000 is the way you phrase it. So you would need to bet $6,000 to win $100, or you'd need to bet $60 to win $1. And you can see why Patriots win 43-0, not even close. And I had said to you during the break too, if people out there recall last year, Miami had a last-second. 7 seconds left. It was one of those like seven lateral plays that usually don't work.
Really?
And somehow they made it into the end zone. So the mantra for the Patriots, I guess, this week was you got to play 60 minutes because last year we played 59 minutes and 53 seconds. So good old Belichick, man, kept his starters in there for 60 minutes. Brady all the way as a statement game. So interesting, man, as in quite early on in the season. But excited as Patriots fans and lots of great fans. Kansas City out there, Patrick Mahomes, 4 touchdowns in the first half alone.
Oh, I got to watch him again. I like that guy.
He's on fire as well. So lots of good happenings out there, man. Football Sunday, gotta love it.
He's going to be around for a long time.
He sure is, man. He is quite a phenomenal player.
Gotta love it.
Yeah.
So let's go inside the Dow Industrials, take a look at the strength versus the weakness in here. And, you know, realistically, folks, this is a sideways market. I mean, when you look at something like this, it's like,
and it really hasn't even moved that much since we came on the air at 10 o'clock.
Yeah, putting some juice into it. You got the Chevron putting 11 points, United Health 10, Exxon 7.
Sure.
Taken away from it, Boeing, minus 24. You get 3M minus 20, Home Depot 14, Procter & Gamble 13.
And I had seen some of them Boeing. Anybody using gas this morning, you're trading lower.
Oh, yeah.
That's it, for sure.
Yeah.
Boeing, just even aside from their woes of the 737 MAX, you're an airline company, you're anything. I mean, you're facing some woes when oil jumps 10 to 20% overnight.
And if you want to see, the differential of the 737 MAX, folks, and how it's hurt certain airlines and not others, American Airlines is like the poster child. So watch this. Bring this back 4 years. You're going to see American Airlines, and American has the most MAXes ordered. Okay. And so you get a stock that went from $59 in January of 2018 and hit a low of approximately $24, $25.
Yeah, 24, 23.
3 weeks ago.
Yeah.
Okay. Now watch this. UAL.
Okay. United.
Yeah, who's not in the same camp, is at highs. This is like amazing. We were talking about this on TD Ameritrade Network this morning.
That's quite an uptrend.
Look at this.
Yeah.
Yeah. And that has to do with if you can't grow. Yeah,
and that's the type of industry where you can't just turn around and say, I'm going to buy another plane from this guy or this girl tomorrow.
Right.
You're buying these planes years in advance in the hopes of expanding, your schedules, you're expanding, where you service. And there's only 2 companies that make airlines out there, make airplanes out there, Boeing and Airbus.
Yes.
And Airbus just can't say, oh, guess what? Boeing can't deliver. We're going to make an extra 200 planes for everybody overnight. Doesn't happen. Unfortunately, American, they're not going to have the planes.
And Boeing, is hanging tough at 376. It's not in bad shape for what when we talk about it. It's
and you can see when the story broke in terms of right there. Yeah. But I agree.
Hasn't been able to make it over it, but guess what? There's plenty of people banking on it still.
And it's probably because, like I talked, for the same exact reason. There's only 2 airline companies.
Yeah.
You need to buy airplanes. I'll get it out from a company. So once they get it back on track. And it's going to take some time, but once they get it back on track, they'll probably be able to repair that. You can already see it in their forecast. Look at that. 2019, they dipped to $85 billion.
Yeah.
By 2020, they still have a forecast of 122 in there. That's just mammoth compared.
That is mammoth.
Look at these. It's probably because they're not selling the planes that they thought they were. So they're at $22 billion a quarter, and they're going to jump up to near 30 next year, they think. But again, it seems like everything is a rosy scenario right now as to how things play out, and that's why it's remarkable that they're so close to where they've been, those highs, because it's all been negative news. Everything's been a pushback. Everything's.
And there's another one this morning.
Everything's been found out more that they might have known, et cetera, et cetera.
Let's go over and take a look at the platinum market for one of our tigers out here. So the PPLT, folks, is the ETF for platinum. That's trading 87.81 right now. So you're down $1.82. The cool thing is this got a it's got a nice high volume high laying out at 93.47. This is probably setting up. Let me see it. Let me do it this way. Let me get the platinum live contract. Okay, so we'll take the active contract. That's trading down $17.80 right now. So you're trading into 39,000 contracts at 18. 929 is the number. We'll get to 928. Put this back a little bit more. I got to put this on a continuous.
Okay.
PL1. Okay.
It's quite a pullback this morning, I believe.
It is. No, it definitely is, man. I mean, this is another indication that this pullback in the metals market's not over. Okay, so you can see, well, you get a nice monster move. The real question, I mean, if you're looking for another buy on this, you're at 934. I'd be looking at like 907.
Okay.
And
high of April 26th, the week of April 26th.
Right. What I'm really doing, I'm saying to myself, okay, it's going to bite into this big bar, which is a monster.
Yeah.
This will give it some support. And that's more than likely, though, what you have here is another ABC structure on the way up. That's because we know that this has high volume high here at the $1,000. So the next leg up, if we just did that, 835. Ooh, that's a nice one, man. To $1,000.
Yep.
$1.45? No,
yeah, $1.65.
$1.65. Yeah.
That puts it at 11 on the dot, essentially.
That'll get you some good juice, man. So And, here's a big one, folks, copper. Copper looks to me like it's bottom. Now, this is going to be a big deal because copper is all about China. So, here, let's go bring it out. HGZ.
China with some tough numbers over the weekend as well in terms of growth. They came in at like 4.4% for China. I mean, for the U.S., would kill for that kind of growth, but we're a very mature economy.
They're looking at 6, exactly. So, this move last week with gold, folks, with the copper, this is a good move. You know, you went topside, 9,500 contracts, you're taking out 9,700 contracts, 97,000, 95,000. This is telling me that we're on our way, up to this 280, and you're at, and you're going to see SCCO that moved with volume. That baby,
Southern Copper.
Southern Copper. I mean, that come off the low of 29. Gets to 36, and then Valley. So what this really exercise is about, you're going to see that base metals, basically have moved higher. And stay right there, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 159, Nasdaq off 33, S&P's off 11.5. And let's go to take a look at Darden for one of our tigers out here. So you get Darden Restaurants, folks. It's a monster restaurant chain. Bottom line is, you take a look at this revenue, you're going to see they own a huge amount of restaurants under all different names.
Yeah.
They do.
There you go. Olive Garden, Longhorn, other.
Yeah.
$15.7 billion market cap. From
big money.
Big
and
money.
restaurants have been making big money.
Yeah.
Oh, look at this, too. Okay, so let's put this on a weekly. So you broke out.
A couple of years.
Yeah, you've broken out.
Yep.
Let me put it on a monthly. See if I can get a little more clarity here. This thing looks, this is strong. I mean, the further you get away from 124 is saying that, guess what, you can do another leg up. And the bottom would be, what, 95 to 124 is $30. They give you like a 154 on a longer basis.
Yeah.
So it's a big number, man.
Definitely.
These restaurants are making money.
They
man.
sure are, man. Yeah.
And
especially when you have good brands like that.
Yeah, and then you picture they get Uber and they get all these things. All of a sudden, they get a whole new business that hasn't cost them anything.
Yep.
You know what I mean? Well, it cost them the aspect of they own Olive Garden.
I mean, look at Longhorn, Capital Grill, Bahama Breeze, Eddie V's. I'm familiar with it. Seasons 52. They're probably going to start doing even their own delivery. You see Outback, Carrabba's, they do their own delivery.
Do they?
Yeah.
Okay.
Yeah.
Okay.
So pretty cool, man.
And if we go back to the gold market for a second, what you're going to see, folks, this is the long-term chart.
Yeah. So we were talking about, you said maybe a 50%. You pretty much pegged it, man. So here's the 50% line. You're looking at 10,091. We dipped slightly below, and that is from basically the run starting in 2001 up to the highs of 2011. And we backed it off, man. So check out Gold Report, Wednesday night, new issue just published today. Check it out on the front page of TFNN.
Listen, folks, thanks for being here. Have a great day. Have a safe day. Stay right there. We got TD Ameritrade coming up next. Then we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.